Start, as you're right, looking long term. Certainly on the resources side, we see value in the likes of Omnia and Mondi. Those are good value stories at the moment. In other words, they have all the value attributes that you're looking for. In other words, a low price earnings multiple, high dividend yield, low price to books. Their balance sheets are sound. They generate cash flows. So those are probably two in the resources.
Somewhat of a contrarian view where paper stocks are concerned. Many out there would dispute the value in paper stocks going forward given their dismal performance to date.
No, sure. Obviously the paper industry has had its difficulties and is in a tough time, and I don't think you can argue against that. But I think what you get in Mondi is you're getting world-class technology with regard to their business, which is streaks ahead of SAPI. They're not burning capital as much as SAPI is. And so once you take that long-term view and you look through the cycle, and once the economy recovers, advertising spend increases.
So there is a future for paper. I think that's really what I'm getting at.
Sure, there's a future, but you have to have the patience and you have to have that long-term investment objective in mind.
Moving off resources, where else are you seeing value?
If we go to the financials, we've spoken about financials before, and Old Mutual is certainly one of them in the insurers, followed by Metropolitan Holdings, which operates more in the middle market. And then certainly on the banking side, there's value in Nedbank.
Well, Nedbank's out with results tomorrow. What are you expecting on that front? I think I was speaking to a technical analyst just yesterday who was saying that Nedbank is set to underperform the other banks, and of course you don't take cognizance of technical stats either, do you?
Technicals, no.
Throw those out with the bathwater.
Out the window. Now, Nedbank, I think what you need to look when Nedbank comes out tomorrow is certainly the bad debt experience. Has that bad debt percentage stabilised? Has it worsened, or has it improved? What is the trend with the bad debt? Their capital adequacy has always been very good, so you would expect that to still be above the regulatory hurdles, but positive. And then get an insight to their retail business, how that's been doing, because obviously everyone knows that the consumer has been under pressure. We would like to see, is there advances growth? In other words, have they started lending money? A couple of months ago, Standard Bank came out saying that they are starting to lend, but only to their clients at the moment. Nedbank had similar muttering, so it will be interesting to see whether the banks are now starting to lend to the consumer.
How long have you been a holder of Nedbank? At 113 Rand 55, it's up 1% today. Did you get in quite a long time ago?
Yeah, we got in last year around August, September, if my memory serves me correct. So we've been in it for a while. And yeah, we saw value almost over a year ago. So and we still see value in the banks. Typically last year they reached price to book multiples of 1.1, 1.2, which is unheard of for the quality of the banks that we have in South Africa. Typically they should be trading in excess of 2.2 times price to book, which is a key measure for a bank. So obviously that has narrowed. So that discount has narrowed. So yeah, there's still some value in the banks.
Liberty International, while we're speaking about financials?
Liberty International, yeah, they came up with a quarterly update today. They had a tough time, obviously exposed to the UK commercial property market, which has been smashed. And also they had problems on their balance sheet. They had excessively high gearing levels, and they went through a rights issue to improve that. So the mood of the statement that came out this morning seems to be quite positive in the sense that the property market in the UK seems to has bottomed out. Their vacancy experience is improving. So in other words, they're getting less vacancies than they were. Their tenant failures have also have improved. And they mentioned that they haven't reached any debt covenants, which is positive. But a concern.
So is all the bad news in the market then?
I think the bad news is in the market, but I'm still concerned about their balance sheet and that gearing. And they're going into now winter, so into quite a competitive trading environment. So you'd like to see sort of what their turnover rentals are like post Christmas.
When you say you're concerned about the balance sheet, what does that mean where your investment decision is concerned?
Well, that would come into an area that we look at the quality of the business. So, typically, obviously, the shares we invested need to satisfy the value criteria.
But do you have exposure to Liberty International?
No, we don't.
Have you been looking at it?
We have been, but we still remain cautious about that gearing. In the property space, we prefer SA corporate real estate. It's got a great portfolio mix within its fund, effectively, and it's got a very nice distribution or yield coming out of the business. So, when property continues to, when it picks up again, you're going to get a solid distribution growth coming forward from SA corporate.
And Growthpoint, just having listened in on that conversation with Norbert Sasser, the CEO, their growth in distribution per linked unit coming down, previously reported at 7.6%. I think, Norbert, they're saying that we could look at lower than 6%. I'm going to have to go back and review that interview, but it's certainly the message that I got.
Yeah, that sounds very, very low. Typically in the past, distribution growth has been in excess of 10, 12, almost 15%. And obviously with the economic environment, these are naturally what you would expect them to come down. But to come down below than 6% seems hell of a low. It's below inflation, which I find quite interesting, given the fact that I would have expected most of the rental escalations in their leases to be in excess of inflation. But obviously they've distributed units. So
well, to be fair, he didn't put a number on it. He kind of talked around.
Yeah, and I suspect he's being a bit
cautious.
Overly cautious. They've done a great acquisition in Australia. I think that's really, really good for their business. They've taken opportunity of that market that did.
That was Orchard's industrial property.
Orchard's industrial property that the Australian property market did I wouldn't say collapse is too strong a word, but it did go under pressure, not to the same extent that the UK property market did, and not to the same extent, well, South African property market didn't fall as much as the Australian. So they were clever, and it's a good property portfolio that they're getting exposure to, because if you have a look at that fund, they've got good tenants in there. They've got the large retailers that are large corporates, so that gives you a comfort with your lease sort of on a 5-year period.